St. Louis is reporting some solid job gains all throughout 2011, and that is translating to a pickup in apartment demand. But to encourage that traffic, apartment operators are keeping rent growth at pretty minimal levels. Welcome to Apartment Market Dynamics from MPF Research. I'm Jay Parsons, your St. Louis update. So far in 2011, the St. Louis metro area has gained about 35,000 jobs on net. That's not enough to replace all the losses from the downturn, but it is enough to feed some pretty healthy apartment demand numbers. Take a look at this chart showing quarterly apartment demand by quarter, and you can see that in general, fourth quarters have been horrific for St. Louis over the past few years. But aside from that, the numbers look pretty good. About 3,000 units absorbed in 2011, and at the same time, new supply has been limited to just 713 units. And that's leading to a bounce back in occupancy rates, up 1.8 points so far in 2011, up to a rate of 93.6%. But I go back to that horrific fourth quarter, specifically from last year, when occupancy plummeted 2 points just in those 3 months. So the market is still recovering from that loss. And so when we stack up St. Louis to other Midwest markets, it doesn't fare so well. St. Louis has the second worst occupancy rate in the Midwest region, ahead of only Indianapolis, and it's behind Kansas City, where occupancy is at 94%. So let's shift to pricing trends. Given the fluctuation in occupancy rates, apartment operators aren't feeling too confident about keeping rent growth at levels approaching the national norms. Year-over-year rent changes come in around 1 to 2% in each of the past 5 quarters, and same-store rents are up just 1.7% annually as of Q3. And again, among Midwest markets, St. Louis is second to the bottom. Only Dayton produced less growth in the past year, and by comparison, Kansas City is at 2.9%. Now, if we're looking for bright spots in the St. Louis apartment market, we go west to the western suburban areas of St. Charles County and West St. Louis. And let's start with St. Charles County. It leads the metro with an occupancy rate of 96.4%, up 0.8 points year over year, and annual same-store rent growth is at 3.7%. And then close behind is West St. Louis. Occupancy there is at 96.3%, up 0.9 points annually, but despite that strong rate, rents are up just 2.4% year over year. So again, even in areas with strong occupancy rates, rent growth has been pretty moderate. So overall, a mixed bag for St. Louis, but this is one apartment market that we expect to show some good improvement in both occupancy and rents in the year ahead. And that's simply because of the economy. It's showing some sustained and consistent progress, and if that continues into 2012, we should be able to see some good revenue numbers for the apartment market here. And that wraps us up for St. Louis. So until next time, for Apartment Market Dynamics and MPF Research, I'm Jay Parsons. Thank you for watching.
Want more? Go deeper with NPF Research's apartment market reports. From a national level, down to individual metros, to specific neighborhoods, NPF Research has been providing unparalleled apartment market intelligence to the multifamily industry for almost 5 decades. Learn more by contacting us at 877-284-4938 or visit www.npfresearch.com and click on Market Reports.